Hey everyone, welcome to another episode of Primary Market Chatter. This is the part two of January first week episode brought to you by Sunday Investing. What we do is in these episodes, we try and talk about the companies which are bringing their primary issues. This is a special issue because this is a midweek issue and we hadn't completed the last issue. So we are doing a special issue just to complete the 4 IPOs which we had not covered last time in the interest of time. Having said that, plus I'll get to learn about a investment trust today. There's one INVIT IPO which is due as well. So, which is very interesting at least for me. So, having said that, maybe let's just get started with the episode and dive right in. I see Tanmay, Rohit, और Yash आ गए. So you know the drill, but still let me just repeat if someone's joining us for the first time. Just want to highlight that we are not SEBI registered research analysts. Nothing that we say can be taken as a qualified opinion. Please do your own due diligence. आप अपना diligence करें and only use this as a supplement to your diligence. And this is like four friends talking about what they are planning to do with their own IPO strategy. And fundamentally, we try and read companies. हम उनका view बताते हैं, but this is no way a qualified read. Having said that, second thing, which again a lot of you have already joined, but still if someone has been living under the cliff and hasn't joined the YouTube channel, please go ahead and join the YouTube channel as well. ऊपर आपको लिंक में YouTube चैनल का लिंक दिख रहा है, वहां पे हम ये स्पेसेस रिकॉर्ड करके डाल देते हैं with proper timeline, and you can listen to any of the IPOs at your own will in order to understand the basic details of that IPO and get to learn about only specific that IPO. With that, let me just set up the agenda for today's space. What we are going to do is we'll probably start with two SMEs. We'll first talk about BR Goyal, which is a big size SME. Then we'll move to the second SME, which is Delta Autocorp. Then we'll talk about the one investment trust which is coming, which is Capital Infra. And then we'll probably end with Quadrant Tek. I know there are a lot of questions with respect to Quadrant Tek. Capital Infra is something which I am very excited towards. And then BR Goyal and Delta Auto are rather heavily tracked SMEs and with decent GMP. So it's going to be a pretty cracking episode. I'm very happy about that. With that, maybe let's just go ahead and move ahead with the episode. In the meanwhile, if you have any questions, आप अपने questions chat में डालें. We will talk about them as well. Discuss once Indo Bell already discussed. It's the reviews up on the channel. आप YouTube पे जाके देख सकते हैं. It doesn't change only if the GMP changes. We still believe in the company that we had kind of shared, and the fundamentals remain pretty much the same. With that, let's talk about today's IPO, and then probably we'll start with BR Goyal Infrastructure. So the company is engaged in business of construction of infrastructure projects such as roads, highways, bridges, and buildings. This Indore-based company operates with over 199 construction equipments and vehicles. Just setting up the IPO, it's a big size IPO, as I said. The company is raising 85 crores from the market, all of which is a fresh issue, which is a good thing. The company is coming at a market cap of 322 crores. So it's like diluting somewhere around 26 to 28%, somewhere around those rates. If I talk about the financials, the company did a revenue of 600 crores in FY24, and I was able to do a PAT of 22 crores. So rather thin PAT margin. The company operates at like 4% का PAT margin है company का, and 22 crores पे it's raising at a market cap of 322 crores. So coming at like 15 PE FY24. In terms of the LM is Beeline Capital. So having set up the IPO, Rohit, do you want to go ahead and talk about your read of BR Goyal?
Sure, Manish. I'll not spend a lot of time on this. The company is a good company, but it's also a fairly vanilla company. So I'll try and cover this quickly. So as you mentioned, it's an 85 crore raise. They're raising about half of that for working capital and some of it about, I think, 8 crore for capex. So they're primarily a road and government building construction contractor. 70% of their revenue, I think 400 crore is just this EPC work. They also operate toll collection on highways, which is about 150 crore. Now, this looks like an impressively large number, especially since it suddenly turned up last year. But this is very basic work. This is just the manpower and management of the toll booths and maybe some kind of basic, light infra work, if some toll booth needs to be maintained and stuff. But otherwise, this is a very, very thin margin. In the interviews, I've said that this business is a 1% PAT margin. So it's a high volume, very low margin kind of business. Apart from these two lines, they also have a small wind power plant where they sell power from this. It's a very, very old 2005 plant. They do some product sales of some concrete and some plots. I mean, all of this put together is some 20 crores. So you can just sort of ignore this, that this even exists. So just view this as a EPC company with this toll collection piece. They have an order book of around 870 crore, which is primarily on this road and highway EPC. So if you look at their EPC business of around 400 crore, their order book in this segment is around 830 crores. So it's about 2 times the revenue that they did. And they have another 30 crore toll collection, though they have bid for a bunch of more toll collections, and they intend to sort of maintain this mix of EPC and toll collection going forward. Now, till July, so last year they did about 570 crore, but till July they have only billed about 150 crore, which is quite low. It looks like the revenue will be lower, but that was explained by the management as mostly because of rains, which is anyway a standard thing. We've heard, most EPC businesses are H2 heavy, especially these government contractor kind of businesses, plus also election impact. They've said that they expect about 70% of revenue will be in H2 and 30% H1. So I'm very confident that they will still hit the if you just assume they can grow at about 25% or so, which is what they have stated in interviews and which is what their working capital calculation suggests, they should get about 680 crore. And I think they should be able to do that if you take account for the, negative impact of the election and the rain, and that they'll catch up later. One good thing here relative to the other EPC players, especially in this sort of road infra that I've seen, is their balance sheet and cash flows are very good for an EPC business. They hardly have any receivables. They have a little bit that are old, about 3 years, but broadly, if you see, they barely have 1 month of receivables, which is very low. Most of the peers, I would say, in the space have 4, 5, 6 months of receivables. And this is despite, very, very solid scale of operations. The company is coming at about 15 times FY24, and I would say 12 times FY25, roughly. This is honestly attractive. It's pretty cheap. But for a business that is saying that they want to grow 25% year on year, I don't see the market paying more than somewhere between 15 to 18x of revenue. Generally, road EPC, the steady growth kind of road EPC players get this 15 to 18x kind of multiple only. And this doesn't look like a very differentiated company otherwise. I mean, we've had some interesting EPC companies over the last year. We had somebody like a Satloker, which was a very different kind of unique sort of play with private clients. At Masco, which had like a different story. Or even AVP, which is a road player, which came saying, I'll grow 100% and is showing that, right? They're in this hyper growth sort of phase. This business looks like a nice, solid business, but nothing extraordinary. The anchors were decent. I think 2-3 good anchors, even again there. You had Mavira, you had Beeline's, AIF, Arth. But for me, this is more of a listing gameplay. I do feel this will give a decent gain on listing. That has that scope of giving anywhere from 20 to 40%. But this doesn't look like something I personally will chase. It's not something I want to hold. It's a solid, steady business, but, depends on who is interested in. It's yet another EPC player. So people can sort of pick and choose in this segment. So I like the company, solid company, but nothing super exciting, to say that this will be a long-term compounder, at least for me personally.
Thanks, Rohit. That was rather short. Couple of questions from my end to start with. One, इसके peer कौन होंगे आपके हिसाब से, which would be the most comparable peer? If you still had to pick one, because again, all of these road EPC players have diversified and have different use cases because of which market has been re-rating the PE per se. So still, if you have to look at a peer, what would you probably say? And the second question is, as long as it had some annuity income of some kind, right? So how do you value that annuity income per se?
So no, they don't have annuity income. They're setting up, there's one HAM project in the projects that they are doing. So HAM is a slightly different beast. It's more about how you get paid. So in HAM, unlike an EPC project where you get paid on completion of the project, in HAM, you get paid 40% upfront and the rest comes in the form of, annuity payment. So it comes via, NHAI paying you the remaining 60% over, say, 20 or 30 different installments. And it is more a cash flow thing. So I don't see that. I mean, that's a nice business, definitely a good business, but it hasn't started yet. It is something that they've not even completed the first they've not completed their first HAM project. So as of now, they are simply whatever revenues they have and that they will have for this year are all just simple, normal EPC business. The good sort of peer, I mean, the closest peer is AVP. I think from the SME space, there are a whole bunch of these in the Mainboard segment, but probably AVP is one. But AVP is someone who's growing at 100% and sort of showing that he's going to grow 100%. His projections and his, it's very clear based on what he's delivered so far that he will grow at 4x the speed as this company. So I don't think the multiples that the market will give are going to be anywhere comparable. So I don't think you can give an AVP at 25x and BR Goyal at 25x. It doesn't make any sense. But yeah, these are two sort of pure play. I know AVP also starting to do some solar and all of that, but this guy is still very, very road focused with a little bit of, I think, civil work, this sort of buildings and stuff. There are many in the main board. They all trade in this 15 to 18x sort of range. Like HG Infra, like a very big one, in this space, trades at 18 times. Forgetting a few more, but there are many. It's not a unique space.
Got it. एक दो चीजें और, how much is the business concentrated around Madhya Pradesh? Is that
I think 40% or something. It's okay. I mean, there are many of these small SME EPC players will be concentrated in one or two states because they're still small at this stage. I can remember Teerth Gopikon. I think all their business was Madhya Pradesh. It doesn't seem to affect it because the order book is that good. They will keep diversing, but it's not too bad. I think it was 40% Madhya Pradesh. They have some in the northeast, Manipur, Mizoram, which is again, maybe you can say that's a unique capability to be able to deliver in that part of the country. But that was like 8-10%. And then it is fairly distributed. So I don't think concentration is that big of a risk. In fact, it's pretty good, I would say.
No, my question was, this seems like a family house sort of, because they have too many businesses going for them. Like, it seems like a family which has done EPC, ready mix, concrete, wind power, toll collection, and all of them are just jumbled together into one big umbrella group and trying to get that listed. So, very difficult to value them, right? Because it's just doing too many
Most of
businesses.
most of the others are fairly legacy kind of businesses, and very small. Like this wind power is something was set up in 2005. So I'm not even considering it. It contributes some 40-50 lakhs a year. It's so meaningless. They have some plot sales. It's again some 3-4 crore, not meaningful in a 600 crore revenue. There is some ready mix concrete sale, 15 crore or something, not 8-12 crore, some small number. It's so small I didn't care. So this company, if you look at what they're trying to grow, they're trying to grow their EPC business and their toll collection business. These are two separate things. And this toll collection is just a manpower business, which has like razor thin margins. And EPC we all know. So even if you view this as primarily an EPC player, it will get a multiple that a typical EPC, solid growth, 20-25% growth EPC business, and maybe 15 to 18x. That is my view. I think the market will simplify this company, largely EPC business, and give it a multiple in that range.
Got it. One last question from my end, which will probably determine the PE, is the order book. Anything which you could figure out on the order book and how's the promoter?
Order book is, I think, 900 crore, 870 crore. Most of it is EPC. So, like I said, it's twice their last year's sales. And if this year they want to do around 500, 520, 530 crore in the EPC business, I think the order book is sufficient to achieve that. But it's nothing like, say, we had the Rajesh Power recently, which on a 300 crore, I think last year revenue, they had a 2,600 crore order book. So nothing extraordinary like that. I think, again, like I said, good, solid business. I found the promoters also there, like it's a multi-generation promoter family. The third generation is running it now, or at least directly involved. Fairly well spoken and articulate. So I think the company is good. It's in good hands. It's not exciting. That's all.
Got it. Thank you so much for answering all my questions and probably covered all the questions which people also have. If anyone has any other questions, please feel free to post them in the questions as well. Anything on the cash flow? How is the cash flow? You did answer that the balance sheet is of good quality, right?
Yeah, the cash flows are good. The cash flows are good. Cash flows are actually positive for the last 3 years. You can ignore the cash flow in July. That's an arbitrary time frame. So no point in looking at cash flow like randomly in the middle of a typical period. But their annual, when you look at it at the end of each year, their cash flows are good. And they're solid. They're not, what is the word? Concocted to make it look like it is positive. they're genuinely positive cash flows.
Got it. So with that, we have covered the company. I'll also be applying only for listing gains, although I think SMEs have become just so difficult to get that that's a different story of altogether. But yeah, moving forward, we'll talk about, although it's a 85 crore issue, right? So it will have decent chances. So I'll definitely
It'd
be
still be
applying.
400x. I'm sure it'll still be 400x,
It would be
350x or
HNI,
so.
right? My Garib category of retail would probably be sitting at 150x. So I will apply and hope. But yeah, moving forward, talking about the second company we'll be discussing would be Delta Autocorp or Deltic, the brand name that they use. The company operates under the brand name Deltic and is engaged in business of manufacturing and selling of two-wheelers and three-wheeler electric vehicles. Just setting up the IPO for Yash, it's a 50 crore IPO, 55 crore IPO, out of which 50 crore is a fresh issue and a very small 5 crore is OFS. The company is coming at a market cap of 200 crores. So company 55 crores raise कर रही है at 200 crores market cap. So they are diluting the bare minimum 26.5% or something like that. In terms of the FY 24 financials, company did a revenue of 81 crores and a PAT of 8.22 crores. So company 8.22 crores पे 200 crores की market cap के साथ आ रही है. So coming at like 25 PE. In terms of the LM is GYR Capital, which is known for bringing companies at a very light valuation, but this seems like a decently valued company at 25 PE. With that, maybe yes, do you want to go ahead and cover Deltic?
Sure, Manish. Manish, can you hear me?
Yes, I can.
So, Delta Autocorp started in 2016. So basically, they were three-wheelers EV manufacturers, which was passenger vehicles and cargo loaders. Then from 2019, they recently shifted towards the two-wheeler segment, which is the uh, electric scooter part. Now, what one of the most this is the one of the most I would say interesting sector right now, because there is a lot of tailwinds coming into it. So the company under the brand name Deltic is mostly specializing in production of electric two two-wheeler and three-wheeler vehicles. So furthermore, what is the most important part in this company is कि इनका जो research and development है वो काफी काफी अच्छा है, because of the employees that they have in terms of qualified, in terms of the qualification. तो काफी ज्यादा qualified management है इन लोगों का. ठीक है. तो इन बहुत मतलब एक तो मैं एक चीज बता देता हूँ कि ड्यू टू माई हेल्थ आई डिड नॉट गेट मच टाइम टू कवर दिस कंपनी, सो टू रीड अबाउट द कंपनी. सो आई एम जस्ट गिविंग अ ब्रीफ ओवरव्यू अबाउट द कंपनी. तो मोटा मोटी व्हाट द थिंग्स आई लाइक इज कि काफी ज्यादा टेक्नोलॉजी एंड रिसर्च एंड डेवलप फोकस कंपनी है. R&D का फैसिलिटी सेटअप करने का बात कर रहा है विद द हेल्प ऑफ फंड्स, प्लस एक नया थ्री व्हीलर फैब्रिकेशन सेटअप करने की बात कर रहा है. एंड द रेस्ट ऑफ विल बी वर्किंग कैपिटल एक्सपेंसेस एंड जनरल कॉर्पोरेट पर्पस के लिए जो बेसिक चीज होता है वो. तो अभी व्हाट द कंपनी इज ट्राइंग टू से इज कि जो ईवी पेनिट्रेशन है ना, दैट इज ट्राइंग टू ग्रो टू 40 to 50% till FY 28. तो दे आर हेयर टू प्ले दैट स्टोरी. प्लस डिफरेंस बिटवीन द अदर ईवी मैन्युफैक्चरर्स एंड दिस कंपनी इज कि दिस इज वेरी मच फोकस्ड ऑन देयर सर्विस पार्ट. तो वो अपनी सर्विस के लिए बहुत ज्यादा फोकस्ड है कि दे इंश्योर्स कि जो हमारे एंड यूजर हैं उनको सर्विस काफी अच्छी मिले. ठीक है. तो व्हाट दे आर ट्राइंग टू डू इज कि अभी इनके पास 300 डीलरशिप है अक्रॉस 25 स्टेट्स. ठीक है. इसको दे आर प्लानिंग टू टेक इट टू 800 प्लस, प्लस 2 मैन्युफैक्चरिंग प्लांट्स जो है इनके उत्तर प्रदेश में और एक वेस्ट बंगाल में, उसकी हेल्प से, प्लस नया प्लांट भी आएगा. ठीक है. तो स्ट्रैटेजिक टाई अप भी इन्होंने किया है गवर्नमेंट से, जिससे कि ये लोग एक्सप्लोर कर रहे हैं न्यू अपॉर्चुनिटीज. इन टर्म्स ऑफ देयर डिस्ट्रीब्यूशन, डीलरशिप नेटवर्क इनका काफी स्ट्रांग है. ऑलमोस्ट 100 डीलरशिप थी इनकी 2021 में, एंड 300 हो चुकी हैं अभी तक. और ये 800 जो करने वाले हैं इसको भी 8 साल में करने वाले हैं. ठीक है. तो रेवेन्यू और जो प्रॉफिट ग्रोथ है इनका, इट्स नॉट मच, बट कंपनी ने आई गेस एक वीडियो में गाइडेंस दे रखा है कि नेक्स्ट 2 years they plan to double their profits and revenues. तो I think 50-40% ग्रोथ करना चाह रही है कंपनी. सो दिस इज प्रॉपर बेसिक ईवी स्कूटर मैन्युफैक्चरर जो आगे जाके 2-4 नए प्रोडक्ट भी डेवलप करना चाह रहे हैं, जैसे कि जो कचरे वाली गाड़ी होती है उसके लिए दे आर ट्राइंग टू डू सम R&D वगैरह, एंड उसमें उसमें आना चाह रहा है वो. तो आई थिंक इफ समवन लुक्स एट कि अगर मेरे को 2-3 साल के सामने मैं देखूं कि सेक्टर अच्छा है, क्या वैल्यूएशन मिल सकता है, तो इस हिसाब से कंपनी इज डिसेंटली प्राइस. तो आई थिंक लिस्टिंग के लिए अप्लाई किया जा सकता है क्योंकि मार्केट प्रीमियम दे सकता है इसको. प्लस व्हाट दे आर ट्राइंग टू डू इज दे आर ट्राइंग टू लॉन्च ईवी हब्स जिसमें वो लोग अपना मेंटेन एंड रिपेयर सर्विसेज देंगे टू डेल्टेक प्लस अदर ईवी ब्रांड्स. तो दिस इज वन ऑफ द मोस्ट इंटरेस्टिंग पार्ट टू मी, क्योंकि ईवी में ये बहुत होता है कि सर्विस अच्छी नहीं मिलती तो कस्टमर ही इरिटेट होता है, एंड देन दे लेटर स्विच इनटू, या फिर खाली सर्विस की वजह से बाय भी नहीं करता है. तो आई थिंक दिस विल हेल्प एनहांस द पीपल ऑल्सो कि ईवी में कॉस्टिंग ये कॉस्टिंग है, एंड ऐसा नहीं होता है कि सर्विस खराब होती है. प्लस बाकी जो ईवी मैन्युफैक्चरर्स हैं उनको भी हेल्प मिलेगा कि वो आउटसोर्स कर सकते हैं अपना सर्विस, क्योंकि जो क्या बोलते हैं जो लेबर्स होते हैं वो स्पेशलाइज्ड होने चाहिए टू टू डू ईवी वर्क. ऐसा नहीं होना चाहिए कि कहीं से भी उठा के ले आए एंड काम कर रहे हैं.
Got it. Thank you so much, Yash, especially for covering this company while it's still under the weather.
ऑल्सो
मेरा एक
ऑल्सो वन मोर इम्पोर्टेंट पार्ट मनीष, आई लाइक टू से कि इनका जो रेवेन्यू और प्रॉफिट था वो पास में इनके मार्जिन्स काफी फ्लक्चुएटिव थे. तो डेट ऑल्सो मैनेजमेंट सेड दैट कि वो भी इसलिए हुआ था क्योंकि ओवर द पीरियड जो लिथियम बैटरीज के प्राइसेस थे दैट इज करेंटली ऑलमोस्ट एट अ ऑल टाइम लो. 30-35% कट डाउन हो चुके हैं. स्टील प्राइसेस आर 5% लोअर नाउ, एंड एवरी अदर रॉ मटेरियल जो भी ये दूसरे वेंडर से लेते हैं. तो बेसिकली ये सारे जो ऑटो एंसिलरीज होती है ना, ये सब दूसरे वेंडर्स से आउटसोर्स करते हैं क्योंकि देयर इज नो पॉइंट इन मैन्युफैक्चरिंग इट इन देयर ओन सर्विस. इनको ऐसा लगता है बिकॉज अभी इनको पेनिट्रेशन करना है एंड टैम कवर करना है, तो इसलिए ये सब आउटसोर्स करते हैं. तो वो जब सारे प्राइसेस कट डाउन हुए थे तो उसकी वजह से इनका मार्जिन इंप्रूवमेंट हुआ था. एंड इट ऑल डिपेंड्स कि आगे कैसे रहने वाले हैं, and उसके उसके हिसाब से थोड़ा फ्लक्चुएशंस आ सकता है इनके रेवेन्यूज एंड प्रॉफिट्स पे.
Got it. एक दो क्वेश्चन है मेरा which you probably covered. First question तो was just the fact कि why I like the company. जब मैंने पहली बार पढ़ी थी वो the dislike was simply because इनका revenue नहीं बढ़ रहा था. Over the last 3 years इनका revenue काफी constant है और उन्होंने बड़ा strangely ऐसा बोला था कि PAT CAGR of 40% के साथ कंपनी आ रही है. Hardly see PAT CAGR being talked about in standalone, right? You usually talk about revenue CAGR and how it is flowing to PAT per se on the bottom line side. But would it be right to say कि कंपनी में बेसिकली वॉल्यूम में ग्रोथ हो रही है बट क्योंकि वैल्यू कम हो गई है इसलिए रेवेन्यू मुझे कांस्टेंट दिख रहा है.
यस मनीष, दैट कुड बी बिकॉज इनका जो नंबर ऑफ यूनिट्स इन्होंने सोल्ड किया है दैट इज कंटिन्यूसली इंक्रीजिंग.
समझ गया. जस्ट दैट द प्राइस इन इटसेल्फ हैज नॉट स्टूड. सेकंड क्वेश्चन मेरा, ये मेजरली टू व्हीलर प्लेयर है या फिर थ्री व्हीलर प्लेयर है? व्हाट इज द परसेंटेज एंड इज इट अ B2B प्ले, B2C प्ले? सॉरी आई एम आस्किंग अ लॉट ऑफ नाइव क्वेश्चंस.
मनीष, टू बी ऑनेस्ट मैं उतना डिटेल में देखा ही नहीं कि
ठीक है.
इसका मतलब कैसा है, बट ओवरऑल एक ग्लिम्स मेरे को याद है. देयर वाज सम पाई चार्ट, तो उसके अकॉर्डिंग दे वर मोस्टली 50-55% इनटू टू व्हीलर एंड 30-35% इनटू द थ्री व्हीलर.
गॉट इट. एंड इसका peer कौन होगा? Probably would Tunwal be a good peer to compare this? I'm assuming yes, right? Because Tunwal is also not a branded EV story. Similarly, and like, although do they have the manufacturing capability? From what I know, Putunwal is majorly into just assembling the parts and then I don't know how to call it, like white labeling the EVs and selling them in India. Would Tunwal be a comparable, or do you think market will give it a peer over something like a Tunwal?
आई थिंक मनीष ये भी काइंड ऑफ सिमिलर वर्क ही करता है and कि ऑटो एंसिलरी से सारे प्रोडक्ट्स ले लेता है एंड देन उसको अपने नाम पे करके या फिर जैसा भी करके दे प्रोसीड. तो तुनवाल का तो आई डोंट हैव एनी आइडिया कि वो क्या है.
अरे बहुत बहुत बीच में बहुत चली थी यार. रोहित वॉज अ फैन ऑफ तनवाल. रोहित ने मेरे को अप्लाई करवाया था. मेरे को एक लॉट भी मिला था. ऐसा बेचा था ना मैंने. वन पे इट ओपन सम 10% up. But yeah, anything else which Rohit and Tanmay you guys have to add on this company? Because if I look at it versus a Tunwal, I've seen Tunwal's at something like 21 PE, right? This boy is coming at 25 and then has a GMP going for it. I think like 50-60% GMP if I'm not wrong. So that way, though, it seems crazy well valued company. Oh, 89% GMP. Wow. So फिर तो it's at like 50 PE, right? So should be a slam dunk apply only for listing. But anything which Tanmay, Rohit, you guys have to add?
Yeah, I stopped studying EV space after Tunwal. Yeah. That was after the performance of that stock post listing. I mean, it somehow managed to eke out a listing gain, completely managed clearly. But I think this is probably a higher quality management team than Tunwal. So that is what the market value, though I still don't know whether it deserves a 90% listing. And beyond that, I've also not studied this too deeply.
Got it. I would also be applying for this company in retail, hoping for allotment, which is very difficult these days. But yeah, if I get allotment, I'll be selling at least at this GMP. Very clearly, I don't think there's a lot left on the table at this GMP. Very happy to sell EV manufacturing or EV assembling companies at 50 P, especially if they don't have a brand working for them. I don't think they have a brand as such. Also, it would probably be interesting just to see कि market cap to sales का क्या ratio है. So I'm just seeing like Tunwal did 105 crores of sales and is at 252. So 2.5 market cap to sales. Just seeing the same for Deltic. Deltic did somewhere around 81 crores. And, it is decently valued at this IPO price. It's coming exactly comparable even on market cap to sales to Tunwal. So if it's giving me a 90% gain, very happy to let it go at that price. So yeah, that is what our review was with respect to Delta Autocorp. With that, maybe we can move forward and talk about the third company, which is a big size investment trust, Capital Infra Trust. Capital Infra Trust is an infrastructure investment trust sponsored by Gawar Construction Limited. The sponsoring company specializes in constructing road and highway projects across 19 states in India for various government bodies, including the NHAI, MMRDA, and CPWD. Just setting up the IPO, it's a 1578 crores issue. 1600 issue in a way, out of which 1080 crore is a fresh issue and around 500 crore is a OFS. In terms of the revenue, the company did a revenue of 1543 crores and a PAT of 125 crores. LM is SBI Capital and HDFC. So maybe Rohit, if you could just simplify what is the investment trust and like what is it, how is it different? What should people expect from it? If you could just give me a couple of minutes of that, that would be super helpful.
I'll do that, Manish. So I'll start with just explaining what an InvIT is, and then I'll come to what this company does, or this particular InvIT does, and how to calculate the return that one can get from this InvIT, and therefore will there be listing gain, which is what I think everyone cares about. So very simply, an InvIT is very much like a mutual fund. So it is also a trust, like a mutual fund is a trust where we give our money to the mutual fund, and then the mutual fund would invest it in stocks. An InvIT is a trust where you give your money to this trust and the trust would invest in infrastructure projects. So this was a way the government just wanted to sort of allow the average investor, as well, of course, institutional investor as well, to invest in infra projects and help fund some of these infra projects. So the return profile here, though, is slightly different. Unlike a mutual fund where you gain the equity appreciation, here you will gain some of that as well. But ultimately, when you're investing in an infra project, you're typically investing in an infra project that's generating some kind of cash flow. And this trust will get the cash from each of the projects that it invests in. And I'll explain that just shortly, but it'll get this cash from each of these projects. And after accounting for whatever costs are there at the sort of individual project level and at this trust level, money would then be paid back as a distribution to the unit holders, which are us, which are the people who have invested in this InvIT. There are some rules here, and maybe we'll come to that a little bit later, but that's the broad structure. This is a trust, like a mutual fund. This is a trust where you will invest in some infrastructure assets, and those assets will then generate some cash flow, and that cash flow gets paid back to you as a dividend, or let's call it a distribution. So you are investing in this not for the capital appreciation. That is, you're investing at 100 rupees and you sell it at 200. You are investing at 100 and you're expecting to get back a dividend yield that could be, say, 12 rupees, 11 rupees, 15 rupees, 9 rupees, whatever. That number is what is important to calculate, but you are expecting to get some return, which will be much higher than a fixed instrument. So much higher than an FD rate, but probably not as much as you might want if you were to invest in equity. You're expecting 15, 18, 20% year on year. You will not get that much here. So that is the gist of an InvIT. I'll come to this company. Manish, is that helpful? Shall I move to the business itself?
Yep, in a way. So, like a mutual fund, you get units in this, and then the company does infrastructure projects. So, does it get like what's the primary source of income? Whatever it makes from that
I will explain that. Okay. But I'll just come to the company and then I'll explain what is the source of income. So this InvIT is a company that's sponsored by this entity called Goyal Construction Limited, which is about a 7,000 crore revenue company that specializes in road and highway projects. They do this primarily for NHAI and many of the state bodies, the various state government bodies. This company, that is Goyal Construction, which is not the InvIT, but is the sponsor of the InvIT. They have about 26 road projects already today on a HAM model, which is where the source of the income is. So HAM model is this hybrid annuity model where 40% of the money is paid by upfront or, during the project itself by NHAI. And the remaining 60% of the construction money is paid afterwards in annuity form. So you will get say 2 payments every 6 months. That is, or you'll get 2 payments every year. That is a payment every 6 months over, say, 10 years. And you'll come across 20 or 30 annuities. And the remaining, say the cost of the construction was 1,000 crore. 400 crore will be paid upfront, and the remaining 600 crore will come using these annuities. And that sort of gives a fixed cash flow for this entity. That is the source of income for the InvIT. Today, for this particular InvIT, of those 26 projects, 9 projects are going to be acquired into this trust. And that is what they are raising this money for. This money, this IPO, or this equivalent of an IPO, is to raise money to then acquire these assets from Goyal Construction into the InvIT. And as a rule, generally only assets that are already generating money. So an under construction asset is almost never acquired into an InvIT. It is always an asset that has already, generated 1-2 annuities at least, and is already in that sort of steady state cash flow generating model. Only they get acquired into an InvIT. So there are 9 such assets which are being acquired. And then this trust also has a ROFO, which is a right of first offer, on 17 other assets from the sponsor, to keep growing the InvIT over time. The funda here is that as the, say 40% is paid and the 60% that remains to be paid, as it gets paid off, the revenue will keep dropping. So if the revenue keeps dropping, you will stop getting cash flows, right? So you do need to keep adding new assets over time to, keep the sort of cycle going. There are effectively 3 types of projects. There is a build, operate, transfer kind of project, which is a toll collection kind of thing where you don't have certainty over the revenue. It depends on the traffic effectively in that particular year. There is a pure annuity where all the money, you put all the money, that is this, say, Goyal Construction will put all the money and get a return from from NHAI. And HAM, which is the model these guys follow, where 40% comes upfront and the remaining 60% comes over the years. And that is the annuity we'll get. What is relevant here is this company does only HAM, which is probably the best sort of in-between sort of model between all of these. There's no risk, and a lot of the upfront costs are also taken care of. And they are one of 2 InvITs in the market that focus exclusively on HAM. There was this Bharat Highways that came 6-7 months ago. That also is 100% HAM only model, whereas a couple of the other InvITs do a mix of this sort of toll collection where there's unpredictability, as well as a mix of some HAM projects as well. So the revenue that comes in, like I said, is this money that NHAI pays. So there are 3 types of payment that comes. Of that 60%, there is the annuity payment of that 60%. Then there is the annuity payment of the interest of the 60% as well. So it's not just that you're getting, say, of this 1,000 crores, 600 crores to come back. You're getting that 600 crore in annuities, and you're getting an interest on that capital also. And then there is a third, which is this O&M, which is more of an operations sort of payment, which will be the smaller of the of the three quantities. If you look at the P&L, it's a bit hard to understand why this company moves, why the P&L is so vague. But honestly, P&L is completely irrelevant in such businesses. The only thing that matters is the cash flow. What this company has declared is they will generate an operating cash flow of 680 crore next year. That is in FY26, and 660 crore or so 660 crore in FY27. Now, how do you value such a company? This company will be valued simply as a function of the dividend that is paid. So today, this company is going to come at a market cap at that 100 rupee unit price. It will come at a market cap of 2,700 crore, roughly. What that means is this company has to distribute 300 to 330 crore to generate 11 or 12% yield, which is what people will be looking for, accounting for the risk of the unit price itself falling and so on. So the way this number is calculated is you take all the cash flows of each of these projects. There are 9 projects. Each of these 9 projects are generating certain cash flows from NHAI. You take each of those cash flows, you subtract any debt payment, any principal payment, any capex, any operational income, operational costs, You do this at each SPV level. You bring that up to the InvIT level. Then you remove whatever costs are there at an InvIT level. InvIT will have, the cost of the employees. It will have some operating costs as well. When you remove all of that, you are left with a distributable cash flow. If that distributable cash flow is in the 300 to 330 crore range, that means we know that this InvIT will generate 11 to 12% yield. Now, the last time Bharat Highways came, the management very clearly stated that we will generate 11.5 to 12% yield. Unfortunately, in this case, I could not find that anywhere. I could not find an equivalent of what will be the distributable amount in any interview or in the offer document. There's nothing. The management did say that they want to generate a low double-digit kind of return, but what that number is unclear. Is that 10, 11, 12, 15? No idea. I've done some very rough math. The cash flow from operations is around 680 crore. They also have given in the end as a valuation report where they have said that the free cash flow from all of these SPVs will be around 570 crore for FY26, which is I'm just going with that for now. I'm not worried about future years. If it's around 570 crore, if you add up the cash flows of each of the 9 SPVs, you'll get about 570 crore. This company, after the raise, will have only 2,400 crore debt, all of which will be at the trust level because all the SPV debt will be paid off. That 2,400 crore is at around 7.5-8%, which means you can assume that they will pay another 200 crore in debt obligation. So that 570 crore, if you remove another 200 crore, that is 370 crore of cash will be left. Another 20-30 crore of operating expenses at the InvIT level, and you're left with about 330 crore, which suggests that this company should be able to distribute anywhere from 300 to 330 crore, which is 11 to 12%. And all of this maths was for one thing. If I look at what are the other InvITs today trading at what return percent, if you look at the other infra InvITs, they trade at roughly a 10% yield, which means that today, if this company is going to give 11% or a 12% yield, there is a chance that the unit price will go up by 10% so that the effective yield goes down from 11% to 10%. This is what happened in Bharat Highways, where the price went up from 100 to 110, 112, because the yield they were giving was around 11.5%. And so now that effective yield comes to 10.2%. So now this is my maths, this is slightly rough, but my sense is at the IPO price or at this price, they are going to distribute somewhere between 11 to 12% yield. And the market will take that to 10%, which means there is a 10% to 20% upside on the price that this InvIT is coming at. When I saw this for Bharat Highways, I think the first 2-3 days, it was actually fairly flat. It listed 1-2% up. And then suddenly it was taken up to 110, 112, and it has stayed there for since that period. And the company has also been regularly distributing that 10% sort of yield. I have seen another InvIT where the yield is actually only 8.5%, which means that there is even more upside. But I don't think this will fall under that category. I feel Bharat Highway is a very, very good peer because it is also 100% HAM focused. So there is, in my view, mathematically speaking, there is a 10 to 20% upside. There is not a single rupee more upside beyond this. This is not the kind where it lists at 100 and goes to 200. This will list at 100, probably list at 101, 102. It can go to 110, can go up to 120, realistically say 110. Assuming all my math is right. I have a feeling the QIBs who are going to invest in this, especially the anchors, they would have the very detailed math. I was not able to do, absolute exact Excel maths based on whatever information is here. So this is my rough sense. A couple of other small points. Anchors have been allotted the InvIT at 99 rupees, not 100 rupees. I'm not sure why that is, even though the band is 99 to 100. Your anchors are all different from your typical mainboard anchors. These are all mutual funds only. But I think one good thing is there is a 15% allocation to quant, which I think always augurs well. Otherwise, it's just a bunch of normal Indian, bank mutual funds. I think overall, I am actually planning to take a punt on this with the information I have. This will be a proportional allotment. This is not going to be BHNI, HNI. This is slightly different. The category is slightly different. So I might take a punt to get a small allocation just to later just track and see if my math is correct. And hopefully maybe post listing, there may be some interviews where they're able to actually quantify the exact distribution they give. Is it because we know it's double digit. So we know it's not going to be less than 10%. If it's not less than 10%, I don't see this company trading at less than 100. So I think the downside is protected with a small upside of say 10%. So it's interesting. I think good that more of these InvITs are coming to the market. There's also another small point, which is the tax on the InvIT distribution is not your marginal rate. It's mixed depending on how much of the distribution is from that annuity or the payment of the principal and interest and how much is from other sort of payments. So that also, it's impossible to calculate it today, but the tax rate will also be slightly lower than normal, than a typical fixed instrument. So overall, it's quite interesting. I do plan to do a small application, make sure I track it. I see 0 to 10% is the listing, so don't expect a big listing in. This is not the kind of stock that will list much higher. But I hope this helps you guys understand how to do the math and what sort of goes behind valuation of such a entity.
Got it. Very helpful, Rohit. Just one clarification. So tax rates would be higher than equity, right? Lower than your fixed instruments, but higher than equity.
Yes, you are getting
Because
two, right?
your
Like firstly,
would be taxable at your your tax slab, and not really at the equity level per se, right?
yeah, part of the distribution, as far as I understand, will not be taxable at all, and part of it will be taxable at your marginal rate. So your blended rate will be somewhere in that 15-20% range. Not assuming that you're in the 30% category, there's some at 30%, some at 0, so it'll be somewhere in between. But what is the component of each is unclear. Like how much is the 30%, how much is the 0%? I don't know. They've not, you need to know what is each component and know what is the tax that applies for each one. And that is not clear at this moment.
Got it. When I was reading about top share, the REIT which I had came, then it said that whatever interest income which the company makes and gives to you, that would be taxed at your tax slab, and then whatever rental income it makes would be taxed at a equity level per se. That is what my understanding was. But
there has been some, like I think last year there was some change in the rules and the rules were undone again. I think the bits where the principal is getting paid back, which is actually the biggest chunk of that of the InvIT, that I believe is not taxed. But anyway, I'm not an expert on this. Forget all of that. I'm saying the market looks for 10% return. 10% to this should give. Above this, market will price it in so that they get at least 10%. That is my view. And if that is the case, then there is a small listing gain that can happen.
Understood. Couple more questions from myself. I'm just looking at Chittorgarh, so might be completely wrong, but does this have a retail category? Because there are two different things. One says that you can apply it from retail 150 shares. The other says QIB 75%, HNI is 25%. So is there a retail category? Or
I think it is just a QIB and other, if I'm not mistaken. And you can apply. Like there is no SHNI, BHNI. I think it's all like just a proportionate. Like depending on how much you apply, you will get, say it oversubscribed 10 times and you apply 10 lakhs, you get 1 lakh. It's like the old school style of this thing. And I presume if it oversubscribes 10 times and you apply 15,000, 1 in 10 people will get.
Got it. Understood. So think of it how you get your SME allotment, very similar to that. So
correct.
Track how much is it getting subscribed and apply it to be able to get some. And I'm assuming the outside would be like 150 shares. Yeah, it says minimum of 150 shares.
Yes, that is 15,000 rupees. Yeah.
Got it. Makes sense. And from, as you said, the market would price it in such a way that you would think that the yield is somewhere around 10%. So if the market expects the yield to be, let's say, 12%, then it will just increase the price such that the yield is somewhere around 10%, is how a naive person can think of it, right?
That's exactly how I myself am thinking about it as a naive person. But yes, this
Got it.
this is what I've seen with other InvITs. Like I know there is this other InvIT that listed a few years ago, I think 6, 7 years ago, IRB Infra InvIT. That is one where the cash flows have been continuously reducing. But if you just add the distribution, like I know people have said, oh, there's a wealth destroyer, yevo, but that's without accounting for all the distribution income also that has been given. So net, you have made money. If you bought that and held it till today, you have more than made money once you account for all the distribution income also. This is something where if you don't keep adding new assets over time, the unit price will keep falling because the revenue, this annuity revenue will keep falling over time. So you don't need to keep adding new assets. But I think most of us, I don't know how many of us are looking at it with a super long-term view. At least with an ultra short-term view, I feel this will stabilize at 10%. And there should not be a lot of downside. There should be very small upside. And people who want to track this, learn about this a little bit more. Once, if you take a small allocation, you will also definitely follow and listen to the interview once the thing lists and they'll turn up on CNBC and you'll get a better idea. So from that perspective, I am certainly planning to do that. I'll definitely take a small allocation here and it just help me understand a completely new aspect of the market.
Got it. Thank you so much. This has been very helpful. At least for me, I was able to understand about how InvITs work. So it's been definitely helpful for me. Thank you so much for that. But yeah, with that, maybe we can move forward and talk about one last company. Very quickly, setting up Quadrant Future Tek for Tanmay. The company develops next generation train control and signaling system for Indian Railways Kavach project, enhancing safety and reliability for the passengers. The company also has a specialty cable manufacturing facility as of today. In fact, Kavach is a future project for the company, and cable manufacturing is how I'll kind of read it as of today. Just setting up the IPO, it's a 290 crore IPO, all of which is a fresh issue. The company is coming at a market cap of 1160 crores, so they're diluting somewhere around like 25%, slightly north of 25%. FY24 financials, the company did a revenue of 152 crores and a PAT of 15 crores, 14.7 crores. So at least at a PAT level, the company is reasonably valued. It's coming at like 60, 70p, something like that. In terms of the LM is a new boy on the block, Sunday Capital Advisors. Sunday is not SUNDAY, which we call ourselves, SUNDAE, Sunday Capital. With that, maybe Tanmay, do you want to go ahead and talk about Quadrant Future Tek? I know you were very excited about this one.
Is my voice audible?
Yes.
So Quadrant Future Tek Limited is a manufacturer of specialty cables for railway and defense sector. Okay, so basically this company manufactures high tensile but low light cables which have a comparatively lower weight than the usual cables with application in defense and railway sector. Railway accounts for almost 75% of the revenue and defense related cables account for 25%. The company has received a 980 crore purchase order from Railtel Corporation, which is a listed company for developing train control and signaling systems, which is popularly known as Kavach. So there was a MOU signed by Railtel and Quadrant, I guess 6 to 8 months back, and then Quadrant received the order of 980 crores. This 980 crores is including taxes. Okay, if I remove the taxes, it is like roughly kind of a 800 crore kind of an order. So this company has got the purchase order for supply of this Kavach systems in FY26 itself. Okay, so the company has recently published a catalog for specialty wires related to solar segment. Okay, the catalog has been already published. So this company is raising 290 crores, out of which 150 crores are embarked for working capital requirements for the specialty cable segment. The company has embarked 24 crores for capital expansion of for developing electronic interlocking systems. the company has kept 24 crores for repayment of debt and rest 92 crores for GCP. This 92 crores honestly looks a bit stretched number because it crosses the limit of that 25% cap on which SEBI has said कि आपका. But there is one more thing at post reducing the IPO or the listing expenses, it should be 25%. Maybe on that part it might fit. The company did a revenue of 153 crores in FY23 with a bottom line of 13.8 crores. The revenue dropped by 0.5% to 152 crores, and the PAT increased by roughly 68% to 14.7 crores. In H1, the company did a revenue of 65 crores but recorded a net loss of 12 crores. Now one will say कि यार loss कहाँ से होगा out of nowhere. So what the company did is the R&D expenses and development expenses incurred for development of Kavach has been pushed in their profit and loss. So due to that, the margins have drastically gone down from 25% EBITDA to roughly 1.5% EBITDA margin, and FY25 should be ideally in console level losses only. So this company, so the order received by the company for the Kavach is wholly expected to get executed in FY26, whose first tranche is expected to be supplied in Q1 of means this June quarter of FY26, the coming financial year. The company has also entered the new cable segment and is also planning to enter in the EV space and the high-rise building space, which also has the requirements of this low weight wires for enhancing the infrastructure requirements. So if I just break down the numbers of the Kavach order and depending on the working capital projections given by the company in RHP, the company should roughly do a 850 crore kind of a revenue, which is almost what we can say 5 to 6 times jumps, and a PAT. So now the PAT is actually many views on it. This Kavach systems which are made by Karnex, they do roughly 13 to 14% PAT margin, but that's just at a 25 crore revenue. And as the scale increases, the PAT margin increases. So there is some industry expert who says that these Kavach systems have the potential of a PAT margin from 18 to 22%. Even if I consider a very conservative 12% PAT margin, which is very likely, the company should do a PAT of roughly 100 to 110 crores in the coming financial year. So, and if I just take the valuation on FY26, the company is coming at a P of roughly 10 or 11 odd times. And the investors, I'll just read out the names who have invested in this company, which includes the pre-IPO investors or the secondary placement investors plus the anchor book investors. So the largest investor in the company is investor Ashish Kacholia, who has invested 36.35 crores, which translates roughly 2.9% equity in the whole company. This second largest, the third largest anchor was Kotak Infra Fund, who is known to pick good companies. Kotak Infra is not a very usual name, but has invested in this company. The third one was the Argan Fund, which is one of the investing of arm of the European private equity Argan Capital Advisors. One more name was popular name was Niveshai Hejox. White Oak Capital has also invested in it, and some more names included Sundaram Alternatives, PGIM, Citigroup, Vijit Global. These are a typically good set of investors, which boost the confidence in the company. And the management quality is also good. The CFO Satish Gupta has a good experience in Yamaha Motors, in Muser Bayer India, which is an MNC company, and he has been also the CFO of Tata Power Solar Systems. The face of the company is Mr. Mohit Vora, who is the director, who has already served to Thermax and Tyco Electronics. So overall, in this company, there are few risks. Their Kavach systems as of now are not RDSO approved, and the company hasn't really supplied any cover system as of now, but they have done, I guess, a 38-kilometer patch in somewhere in, I guess, Telangana. So they have done that at a very small scale. This is actually a really risky. If their coverage is not getting will not get approved, then how will they work? But seeing the management's confidence and the backing of investors and overall sentiment toward this IPO, I feel ki company is capable to supply the coverage systems with all the what we can say, all the with respecting all the regulatory bodies and respecting all the obligations. It should ideally deliver the cover systems in FY26 itself. And who the company which has given the purchase order, Retail Corporation, is not at all a very small company. It's a very what we can say, reputed, a good scale, large scale listed company. So I feel it should deliver that at proper time. So, and the company has majority things on place. It is getting IPO funds, and the GCP which we are seeing actually a bit higher should be ideally for the working capital of covered systems only, which has been indirectly hinted. So the company has funds at place, the company has capacity at place, they have people, they have scale, they have investors, they have everything, and they also have the purchase order. So I feel the company is all set to execute that order. And also this electronic interlocking system is a new segment on which the company is working from 3-4 years, and which may operationalize or start production, I guess, next financial year or two, after 2 financial years. This of this for this segment, the management hasn't commented anything material, but this should also kick in. And their traditional specialty cables is also expected to grow that 20-25% CAGR based on their working capital projections. So I feel this company IPO should definitely be applied. Listing and will be surely very good in this IPO. I will not be surprised if this IPO even doubles or more than doubles on listing. I will not at all be surprised, because see, these companies get that 50-60 kind of a valuation. Even someone like Carnex gets that highly crazy valuations of like 80 times for 26 kind of valuations. So even if I give this company a kind of 20 or 30 times, because there's a risk of few approvals or few different things. So even at that multiple, the company can be 2.5 times. But considering the what we can say, we are not sure ki 100% they are going to deliver and get everything done, because there's an obligation in the purchase order that if you fail to supply all the complete order in that particular time of 1 year, FY26 completely, then that whole order will get cancelled. That's been written somewhere. Not somewhere, there are many places there it has been written. So I feel for IPO it can definitely be applied, and if the whole market gets a conviction on it that the company is set to deliver, the company can do extremely well even post listing. And retail quota is 10%, so the liquidity crunch will always be there in this stock. So green signal from my part, apply for big listing gains. I feel कि worst case 60% to list हो जाएगा ये, and it should do well.
Got it. My question to you, and again, probably this is something which a lot of naysayers are saying as well, कि कंपनी के पास जब अप्रूवल नहीं है, उनको कोई भी रेवेन्यू नहीं है कवच से अभी तक, why do you want to probably, and again, like maybe this is something which you have already covered, but yeah, why do you want to give it a coverage valuation? And like, how can you probably say that the market will discount that and start giving it a coverage valuation? I understand FY26 का revenue कंपनी अभी से like market अभी से discount करने लग जाएगा, because the market is forward looking by let's say a year, but there's a big tangible risk, right? कि कंपनी ने अभी तक कोई भी काम किया नहीं है, revenue recognize किया नहीं है, so they might like have some technical challenges because of which they might not be able to deliver that work, right? So is that something which we should keep in mind when we are investing in this company?
There are a few dimensions on this part. The first is the management has said that we will be sending our first tranche in the June quarter, means roughly in April they should deliver the first set of covered systems. First thing. The second thing is the revenue booking will be quarterly. It's not कि FY26 होने के बाद पूरा revenue एक quarter में आ जाएगा, ऐसा नहीं होने वाला है. The company will book revenues from first quarter only, and the company post that escrow account, the company will get funds at roughly 20 January. Just think it 20 January and April month में कितना ही difference रहेगा. So that's not a 1.5 year difference, so that market will be hesitant to give it a valuation. That's in the short term only, very, very short term. And the company is well equipped and has already started stacking the raw materials. The manufacturing facility is ready. They have everything in place. So, and the backing of investors is also a very crucial thing in it. So I feel that so that was one of my point in the earlier discussion, as I said कि इसको 60-70 का P नहीं मिल सकता है, इसको मिलेगा वो that 20-30 kind of a band only, because there's a surely an execution risk towards this order. So I still feel कि even if I consider the worst case PAT at 80 crores and give it just 20 multiple for Kavach and let's say 30 multiple on specialty cables, and the numbers are actually good. Ki you give 600 crore, 900 crore valuation or 700 crore valuation to the cable division, and you give roughly a 1600 based on 20 times worst case PAT for Kavach systems. Still, you get a market cap of 2500 crore, which is roughly 110% more. So on any permutation combination, you are going to get an upside on this stock, as at least for the listing. उसके बाद क्या होगा, the market will decide, but on listing, money will be shortly made.
Got it. And you are saying that if you get allotment, then you would also want to hold the stock and probably see the story come in live, right? Because if they are able to
Especially for
deliver,
educational purposes, I would like to see how market reacts on
yeah,
on that kind of a story. I want to learn how the sentiment and stock movements grow for such a kind of companies.
yeah, because if they are able to deliver and show strong coverage revenue, then
And I will
there's a lot of
highlight one
upside
more
as
thing.
you said.
The company has already bid it for one more order, okay, which who they have already bid it for that, and high likely that they might get one more order after listing, or 2-3 months, or 2 quarters after. We don't know that, but I just think if the company is able to deliver, the PAT can be 150 crores from Kavach and 25 crores from specialty cables, and just give that 40 multiple. I know 40 is a bit high, but these companies are going to get those kind of multiples with EV, defense, solar, naval, railways, locomotives, for all that thing. So just think 150 crore at 40 times 6,000 crore valuation is actually 5.5 times. So it's crazy. So the positives are much more than negatives, but yes, that small negative of execution risk and the regulatory approvals are risk. But I am personally thinking to give those, that the management is capable to take care of all those things, and they should take care. Now, recently, even GG Tronics, which is the acquired company by CG Power, their uh, prototype was, I guess, rejected or said to, there were some queries made by the IDSO. So they couldn't get the approval. So such a large scale of company had to face that thing. So, but eventually, they will get approved, and they are also working from 2020. So they are not saying that we started on coverage in 2023 and we are launching in 2025. That's not the case. They're working for 5 years. So let's trust the management.
Got it. That's a comprehensive enough review. I'm also going to apply for this company. Rohit, anything that you have to add on Quadrant?
Nothing. I think from what Tanmay said is very exciting. Looks like a very interesting candidate on listing also. I think no one's going to get allotment, sadly, just given how small it is and how high the GMP is, but it looks very interesting to take on listing.
Yeah, it should be very interesting, right? And especially because the GMP is also been hovering somewhere around the 60-70% mark. And it's pretty consistent. I feel that's because the market conditions are slightly sad. But yeah, it should be, I hope that, again, I want market to do well because I have a lot of secondary market holdings. But then in the off case that the market doesn't do well, I'll be very interested in a Quadrant on listing day. But yeah, that is what our strategy would be with respect to Quadrant Tech. with that, maybe we are towards the end of the space. Just couple more things from our end. अगर आपने अभी तक स्पेस यूट्यूब आपने ये स्पेस बीच में ज्वाइन किया तो डेफिनेटली फॉलो द यूट्यूब चैनल एज वेल. ऊपर यूट्यूब चैनल का लिंक है. मैं उस पर ये आईपीओ डिस्कशन स्पेस डाल दूंगा आज इवनिंग में, सो यू कैन लिसन टू द आईपीओ विच यू आर इंटरेस्टेड इन एट योर ओन लेजर एंड अंडरस्टैंड द फंडामेंटल्स. एंड ऑल्सो Rohit did explain how to investment trusts work, so maybe you can get a debrief or a one-on-one of that as well. With that, Tanmay, maybe so like at least for today, all four companies could be applied for listing, right? Planning to apply all four tomorrow per se. Is that what both of your strategies are?
Yes, I am going to apply BR Goyal. This Deltic. Deltic should be a bit lower because due to allotment will be extremely tough, and I'll go on Quadrant. And this I'll add one point on this NVIT. The management has said ki in that ROFO assets, I guess 4 to 6 assets are going to get transferred very soon. So that should increase the unit price. I have a lower understanding on that NVIT kind of a investment segment, but what I could understand is even they are eyeing a unit appreciation. So that is actually see when you invest in an asset, any asset, even in a stock or equity or gold or whatever, fixed income of 20% is always more better than volatile income of 30-35%. So the funds or the institutions or even many HNI individuals prefer a fixed kind of income with lower yield than what we can say unpredictable higher returns. So that can also get a good traction. And this pretty exciting 2-3 weeks ahead, we are going to see three very large, not very large, four large IPOs, four-digit crore IPOs in this month itself. So you shouldn't miss the IPO boom this month.
And I think just to add to what Tanmay said, there are a bunch of at least 2 shareholder quota IPOs coming very soon, right, Tanmay? With both Dr. Agarwal.
एक कल announce हो जाएगा, and one should get announced. उसका थोड़ा headache का, but that should also come soon.
Yep, should be interesting.
And I'll just say one thing.
I'll
give a statement. Many are saying कि डॉक्टर अग्रवाल का शेयर 7,000 का है, 8,000 का है, पैसा बनेगा नहीं बनेगा. I'll just give one comment here that you are going to make more money in Dr. Agarwal than Tata Tech and Bajaj. So this statement should be taken very seriously. And after the listing, I'm not saying listing will be 100%. It will be very low. But just think on a different kind of a maths. You will understand the value of this particular statement at that point after one and a half month. So that's all from my part.
Got it. Then I see a lot of questions with respect to some of the listed companies in play. Just want to highlight that we are planning to do something with respect to some of the listed shares as well. Again, we are still trying to find out how we can do it, because with listed comes in a play of, because these are listed securities, we don't want to do anything which doesn't come in the purview of SEBI, but we are just trying to explore a few things. But we might soon have a listed program as well, very similar to, let's say, a primary market chatter. We might do a secondary market chatter, something like that, where we might discuss some of the results of the companies or some like popularly known stocks. I just see a lot of comments and I want to take them. It's just that we are still figuring out how to do that. But yeah, if you think that would be a good idea, let us know in the comments. We are still trying to figure out how can we cover some of the listed securities, but we definitely want to do that as well and just try and increase the scope. It is especially important, especially in weeks like these where like the two Mainboard IPOs were very small, that it just left a lot of scope on the table for other discussions as well. So we are still trying to see what else can we do, but definitely give us your suggestions as well. What you think we should be looking at. With that, we've kind of covered today's space. I would be updating this on YouTube as well. So definitely go ahead and follow all four of us, and follow the YouTube channel as well. Thank you so much, guys, for joining. Have a good day ahead.
Cheers, everyone.
Thank you, everyone.